Welcome to the 12th episode of How to ThinkScript. We are TOSindicators.com, home of the volatility box. We're currently running a promotion all the way until the end of November 30th for all folks who are either Futures Volatility Box members already or are interested in becoming Futures Volatility Box members. For those of you that sign up for our Futures tool before November 30th, 2019, you'll be qualified to get access to our Stock Volatility Box tool for 50% off as a bundle price with your Futures Volatility Box subscription. And this will be the lowest price available, period, even in the bundle for new Volatility Box members. So if you've been on the fence and you trade futures as well, then this is really the best offer that will ever be available for both our futures and stock volatility box tool. And so if you are interested in that, then make sure you sign up for our futures volatility box tool before November 30th, 2019. And that way you also get access to the stock volatility box tool for free through the end of November to help you decide whether or not this tool really adds value to your trading or not. So far, we've seen that our traders have had some phenomenal success with the stock volatility box tool in integrating it just seamlessly within their own watch list. And that's been amazing to see, and I can only imagine what the growth of this tool is going to look like once more and more people start to use it, and we again get into our spirit of collaboration. So if you have any questions around the stock volatility box tool or our futures volatility box tool or this offer, then feel free to email us at contact@tosindicators.com. Now let's move on to what we're going to be talking about in today's tutorial video, which is the idea of taking our DMI indicator from last time, which was our multiple time frame DMI indicator, and turning those into power move scans. That's what we'll call it. And really, this is in collaboration with quite a few different members. In particular, I'd like to call out Linda, Don, Dorothy, and Dick, who suggested the DMI indicator in the first place. But really, I think in this tutorial video, you'll start to see why we make these videos, right? It's to start to enhance the spirit of collaboration, bring that back within trading, and start to understand that there's a lot that we can all learn from one another, which is evident in this video in itself, right? So I think when we published our DMI indicator last week, in which you can essentially use this multiple time frame DMI indicator to find explosive moves, and we had some folks really ecstatic with this indicator, right? It was really helping those of you that enjoy breakout trading. Well, we now made that old indicator better in this tutorial video, as well as turn those into scans. And to do so, we used insights that were derived from all four of these members, which I've actually captured some of them in this next slide right here. Right, and so Linda sort of got the ball rolling in which she talked about how it's really the slope of the DMI plus line and the ADX that matters, as opposed to the DMI minus line, which we had included in our old indicator. So I think this is one piece of information that we can kind of keep in the back of our pocket as knowledge that really just comes from experience from those of you that have been using the DMI and the ADX in your trading. The second was by Dick, who suggested this indicator, in which he mentioned that using an ADX of 20, and some people even use 25 to help determine prices trending, was the more accurate number, especially over the number that thinkorswim suggested, which was 50. Right? And for those of you, if you remember when we studied 50 last week in our tutorial video, we saw that 50, there were just no entries using the ADX is greater than 50 condition. And that's what thinkorswim suggested. But you can again see the power of having a community, of having multiple sets of eyes, where we now started to have better ideas of the requirements for our ADX. So here we saw 20, 25. So we really saw that the ADX varies. Then we also had Don point out that the DMI lines and the crossover specifically of those tend to give false signals when volatility is low and late signals when volatility is high. And so we can start to keep this, especially for those of you that are options traders. This now fuels, you can start to use the volatility to help determine the accuracy of these signals. And this point from Linda and Don might be things that we include in a future indicator. In fact, there's going to be another update on the DMI indicator that will be for our volatility box members only. But in there, we'll be really just getting precise with some of these variables and trying to create a really powerful indicator that helps those of you, sort of like Keith's indicator helps for those of us that like oversold, overbought trading. This would be for those of you that like breakout trading, and it'll be for members only. And then finally, Dorothy came in, and Dorothy gave us some other ADX values, which again gives us a range that we can look at. And so Dorothy says she's typically looking at between 15 and 25 for the ADX, right? And so here we can start to see some sort of similarities. Really, if we were to try and draw this out as a range, we see that we have 15 here, we have 25 on sort of the more extreme side, and then right here in the middle, we have 20, which seems to be the nice sweet spot where we'll start this. But this particular idea right here is what caused us to then add some enhancements to our current DMI indicator from last week. And so now if we take a look at some of the updates that we've made, and this is available on the website ready to download, and we've also discussed and captured these updates in both the header of the code along with the header of the actual indicator page. But the first update we've made is we added in an ADX is greater than or equal to actually 20 conditions for both our bullish and bearish signals. And this I think helps us make our trend indicators a little bit more accurate. And we'll actually show you a side-by-side comparison of what the indicator looked like when we released it last week versus what it looks like now with some member feedback, and really why this is just so beautiful, the idea of being able to have collaboration and the idea of being able to refine things together, right, as a team. And so the next update that we made is we added in an input parameter where if you'd like to change your ADX requirement, you can go ahead and do so. So for folks like Dorothy who say might prefer 15, you can now easily change that just in one area of the code, and that automatically updates it everywhere else. And then for those of you that like 20, 25, whatever you prefer, by default, this updated version has 20, that middle range that we discussed. And then finally, and I think this was actually a really useful change because a few of you talked to us about the speed of the DMI, the MTF DMI indicator, and that it was really slow on your machines. In fact, I think one of you even had a 32 gig RAM machine in which the DMI indicator was slowing you down. And Keith, I think you and I were even brainstorming ways to make this code a little bit narrow. And so one way we went ahead and did that is by removing the entire narrow range test condition. And for those of you that watched our first indicator video, you'll remember that there were 2 lines of code dedicated actually 6 lines of code per chunk of each time frame for the narrow range test. And so by removing this, we were able to trim down our code quite a bit, as well as some of the calculations required in our code. And what you'll notice is the second version of the indicator should be quite a bit faster while still having all of your time frames in one indicator. And for those of you looking to make this even faster, you can say remove certain time frames that you may not care to look at, things like 2-hour time frames if that's not really your stick. Or you can also take the code and just divvy it up into certain blocks and then make your own versions of the indicator where you might have, say, 4 different versions plotted on your charts, each one with a different time frame. Just some different options suggested by some members that might help you speed up the code, but I think you'll notice that this new version is already quite a bit faster. And if you'd like to download that, that's available at tosindicators.com/indicator/MTF DMI. Now let's go through what we're going to do today, which is take our new version of our DMI indicator and turn that into scans, right? And so we'll have really 3 scans that we build, but what you should start to notice is it's the same consistent block piece that you can then start to adjust in whichever different ways that you'd like to adjust. And so for me, let's approach these scans with logic first, right? And the way we'll go ahead and do that is by looking at our bullish scans, and we'll think about this almost like dominoes falling. And so the way then the conditions we'd like for a bullish scenario is we want it to be bullish on a more long-term time frame chart, which is our daily chart. Then we would like this to be bearish on our smaller time frame charts, which tells us that we're bullish, but we're pulling back on our smaller time frame charts, which gives us an area of opportunity to enter, assuming you're trying to play that same bullish scenario. And so here we're looking for bearish on our smaller time frame charts, which is 4-hour, 2-hour, and 1-hour time frame charts. And then finally, we want to see the dominoes start to fall on our smallest time frame charts, right? And so there we want to see a bullish turn in events where we have a 30-minute, a 15-minute, and a 5-minute chart all signaling to us that they're going bullish. Now for our bearish scenario, we're going to be looking at the exact opposite, right? Still looking at this as dominoes falling, but here we're now looking at this for a bearish scenario on our daily charts, or a bearish zone as we call it in our indicator. Bullish on our mid-tier time frame charts, which is our 4-hour, 2-hour, and 1-hour time frames. And then finally, we would like to see this again going bearish on some of those smaller time frame charts in the 30, the 15, and the 5-minute charts, right? And this is where you'll notice the way we build this lets you either add or subtract any of these conditions really easily, even if you don't know how to code. You can just start to treat this as blocks of code, almost like Lego pieces that you can then build your own puzzle that you then fits your trading style in terms of scans. And then finally, we'll do something a little bit different, but we'll build a scan in which we're looking for neutral on our weekly, daily, and 1 hour chart. So here we're looking for long term, and then we're using that 1 hour as sort of our proxy for our middle, short-term time frame charts. And we're looking for these conditions to ultimately help us find candidates that those of you that enjoy selling options can start to sell spreads and iron condors around. And as usual, for those of you that would love to follow along the tutorial video, stay tuned. We're going to now go through the process. But for those of you that like to skip and just get playing right away with the indicators and the scan files, you can download each of them at these respective URLs. So the updated multi-time frame DMI indicator, which would really help you find some of those more explosive moves that let you find some home run type trades across multiple time frame charts. That's at MTF-DMI on our website under our indicators page. And then today we're going to be building the actual power move scans in which we take this exact indicator and turn them into scans and show you the process of how you can take something as powerful as this indicator and now break it down into chunks to then find the opportunities yourself. Instead of having to just look on your watch list for opportunities, you can now go and see where these opportunities are really triggering. And the power move scans are available for download at tosindicators.com/power-move-scans. All right, let's get started. And before we actually get into the code, I'd like to take a look at the indicators, the before and after of before the member feedback and after the member feedback, so we can start to notice some of the subtleties and the improvements that has been made in the code. And so the current version that we have is our V2, which is after member feedback. So let's go ahead and add in our first version. So once we add in our first version, this is what we had originally released last week. And what we can start to notice here is you see a lot of yellows. And in this move right down here on the S&P, we again saw that we were neutral to then bearish. And we had a few different islands here. And what we call islands are candles that are one color when the rest of the candles surrounding them are a completely different color, right? And so in this case, we see some red candles on their own, which might have made you lose some confidence in the bearish scenario of this overall down move, especially with the back and forth alternation between yellow and red, yellow and red. Then again, we can start to notice we again go into chop here, red to yellow, and this yellow is a little bit late in predicting the overall uptrend that we now started to face. Now, let's go ahead and bring in our second indicator, which is our updated version of the MTF DMI. And now if we click OK using this indicator, what we can notice is hopefully the moves are a little bit more responsive where we need them to be a bit more responsive. So we can see this down move here has a stream of red candles, so a little bit more bearish, decisively bearish. We can also see this turns green a little bit earlier. And here we can notice that this entire period is yellow, but the period before we've actually captured some of this red move. We do have one island candle still here, the green, which is a little bit of an early precursor as to the move that's to come. Not sure that you would really use this as a signal, even though you had a nice move up higher after, but this should start to illustrate how you can notice a little bit fewer islands on this version of the indicator and some earlier signals that at least we can now say that has more experience behind it in terms of user feedback around the ADX numbers. And if we just cycle through a few different charts, you can also notice that this indicator is plotting a little bit faster here compared to the first version of the indicator. Right, same thing. If I now say go to now, the labels are plotting a little bit quicker. Now, for example, on the charts, we see a stream of yellow versus on our first version of the chart. Let's take a look what that looked like. Pretty similar here as well, but we can notice here we had a few green fake out candles almost that would have gotten you into a move that didn't really pan out, right? And so this is where I think that this new version just helps us be a little bit more accurate in some of the moves that we're looking for, and I think that's just the power of experience. Now let's take this new indicator, which is our V2. So we'll pull that up and we'll go into the code. And we're going to scroll down all the way to the bottom. And if for those of you that watched that first version of the tutorial, the bottom is where we had our indicator code without any of our actual time frame period variable names associated with the variables. And so these are our clean variables that we can apply into our chart. So I'm going to copy paste this and now come into the scan tab and go ahead and paste that in here. And so if I come in and I paste the scan in, we'll notice that there's quite a few errors right off the bat. So one of them is we don't have a length, one of them is we don't have an average type, right? And so now if we come back to our code, we can bring those two in. And so I have the code copy pasted in a Sublime indicator right here. So that's where I'll copy this in from. So input length, actually let's just copy all three of these and we'll paste them here at the top. And now we'll notice that we don't really need these price colored candles anymore. And so we can remove that entire indicator. And we'll notice that we have one error here, which is at least one plot should be defined. Now, for that first scan that we talked about, we wanted to see a bullish zone on the daily chart, right? And so the actual indicator or the variable here that I'd like to plot is the bullish zone. So there I'll click, I'll make sure to have this set to plot. And now if I click OK, I have the daily aggregation time frame selected here. I'll copy paste this in so that I can add a few more instances of this. And now I'll come in and I'll click Add Filter and Study. Now in Study, we highlight over, we click Custom, click thinkScript Editor, and copy paste this code in. And now we said we wanted to see this bearish on our shorter time frame charts. And so let's start with our 4-hour chart here. And so we'll go to our 4-hour chart. And in this case, we would like to see this be a bearish zone. So we'll change our bullish zone back to a def and turn our bearish zone here into a plot. And this way, our plot is essentially picking which of these conditions we'd like to turn on, right? That's one way to think about it. And so here we'll choose our 4-hour chart, and then I'll go ahead and select not to include extended hours trading. And this is for stocks. If you are using this for futures, you might care to have extended hours trading selected on. And so we'll click OK here. And we'll go ahead and repeat this for the remaining conditions. So the next one we said was, I think, a 2-hour chart. And so let's go ahead and plot the same thing, right? So once again, we want the 2-hour to be bearish. And before we actually continue, let's check to see if this even on its own gives us any candidates. We want to make sure that we don't make our criteria too stringent, since at the beginning, all we did was really a brainstorming phase. Now we'd like to see if we've made this too specific. Okay, so we're seeing that this isn't actually running any results. We've been waiting for quite some time, and so it looks like this criteria might be a little too stringent. Oh, never mind. I spoke just a little too soon. So we do see that the 2-hour now still gives us candidates. So here we have our bullish daily, bearish 4-hour, bearish 2-hour. Now let's actually, let's add in our bearish 1-hour as well and see if we lose any of these candidates here. And so if we add in our bearish 1-hour, click OK. This time we'll scan. And if we lose some candidates here, then is where we might remove our 1-hour candidate, or might even remove our 2-hour candidate first and then see which is better between our 4-hour, 2-hour, and 1-hour. Okay, so we still have quite a few candidates here. So I think that's a good sign. And now what we'd like to do is start to add some of our turning points where we're starting to note that we're turning bullish, right? And so if we copy paste this in one more time, and here we'll once again turn this back onto a def and turn our bullish back into a plot, and we'll bring this to a smaller time frame here. So let's say 30 minutes, and we'll copy paste this. So in case we'd like to keep narrowing these conditions down, now we click scan. And if we don't find any results using our 30-minute chart, then we'll go ahead and switch to, say, a 15-minute or maybe a 5-minute and see if those start to give us some other entries. And otherwise, we may have to just start to find a different way. So we see that our 30-minute gave us, and so we see that our 30-minute didn't really give us any entries. And so now let's bring this down to a 15-minute scan, and let's see if this gives us any entries. Okay, so we see we have one entry here off of our 15-minute scan. And now let's actually take a look at this entry, right? So that's in PDD. So if we come down to our charts, let's navigate to PDD, make sure that we have our new indicator in. So this is the old version, so we'll bring in our DMI V2, click OK. And here, okay, so let's verify that the conditions that we wanted actually panned out to be true. And let's actually use our labels to go ahead and help us do that. And knowing that our scan is using a 15-minute chart, the smallest time frame chart that we need to be on is 15 minutes. And so if I come to a 15-minute chart now, what we should notice is our 15-minute label is green. Our 30-minute label, okay, well, this is why it didn't show up in the 30-minute, is red. But we also notice that we have 4-hour and 2-hour is red. And then our daily time frame is green. And so on the short-term time frame, we're noticing that we're starting to see more bearish scenarios. But on that 15-minute chart, we've just started to see that bullish turn. And on our daily chart, we have a pretty decisive bullish scenario here, right? And so now if you went ahead and you added in some of your more typical indicators that you might be looking at, things like your moving indicator, we can even, moving averages, we can also go ahead and add in our V-score, right? We can see that we're close to maybe say the 2 standard deviation line here. That helps you start to at least understand some of these candidates that you might like to build some trades around. And you can now tweak this the way you'd like. So we can now change this from say a 15-minute, and now you might even want to come down to a 5-minute, right? We want more candidates than one. Let's go ahead and click scan and see if this gives us more candidates. We might now even start to remove maybe say some of these conditions based on what you're looking for, where we don't want it to be too bullish, or we might want the 1 hour to start to actually give us the bullish turn, but our 2 and 4 hour to still be bearish. We see we had another one, PWR. Really, I think this starts to give you an idea of how you can use the scan as Lego blocks, right? And so we'll go ahead and build out the rest of these, but all that you're really doing for each different scan is tweaking the plots here, whether it's a def or a plot, and that then helps you start to figure out what sort of scans you're looking for, right? And this is where you can now build something that actually fits your trading style. If you like trading pullbacks, great. Build out a pullback scan in which you're actually using your brain and some logic to put together something very, very simple that makes sense strategically, so that when that setup actually comes, you're not sitting there just wondering, does this technical setup make sense? You've actually put some thought into the logic behind what this technical trigger actually is. And I think that's the power of building your own scans as opposed to, say, using someone else's scans that they've built. Now, however, on that note, I'll still go ahead and build out at least some of these scans. I'll be sharing at least this block. I'll create one bearish block as well, along with the neutral block, all of which will be available for download in the downloads folder on the website for this indicator page. Okay, so that was a shorter tutorial than usual, but hopefully that helps you understand how you can take what is our powerful DMI indicator, in which you can already, and traders have already started sharing setups with us, in which they've used that to find some incredibly powerful moves in both stocks and futures, as well as actually Forex markets for that matter, since this works on all of those. And they've started to use the labels, the multiple time frame charts, the ability to now condense the DMI indicator and the ADX into just very simple labels that anyone can see on a chart on an aggregate basis, I think is incredibly powerful. And at least for traders that love breakouts, you've already proven to us that this indicator has given you an immense amount of value. And so we thank you for all of your emails, your kind words, your support, your suggestions, your encouragement. But we also offer you the DMI Power Move scans today, hopefully as a measure to then now go and find some more opportunities in, say, some markets that you may not necessarily know to look at, or at the very least, it helps you just very effortlessly find some of these scans. Or for those Volatility Box members who have access to our Stock Volatility Box tool, this then helps you start to formulate some more scans that now start to broaden your horizons in terms of the symbols in the universe of stocks that you care to look at, and what pops up on your scanner and why it pops up. And I think that's important, right? So like just a very simple example before we leave in this video. You might have had that bullish scenario in which we're looking for a sell-off in which we can now buy the dip. And that's the thought process behind, say, one of those scans. Well, our Stock Volatility Box may now give you that precise point of entry using either that aggressive or conservative volatility box for whichever you're looking for, which now gives you basically all the confidence that you would need in the world to take that trade with an edge at the edge and start to trade with the momentum as that momentum is actually shifting, and really take advantage of some of these moves that I think, at least for those of you that are options traders, pay off incredibly handsomely. I hope this tutorial video was helpful. I hope the updates are helpful. Thank you all for being part of this wonderful community and for sharing all of your years worth of experience, your wisdom, your insights with us. I think we're able to see how we're able to bring that together as a community to help all of us become better traders and build better tools for all of us to be able to use to consistently take out profits from the market. All right, take care everyone, and we'll see you in our next How to ThinkScript video.